Welcome to the Freedom Finances Show. My name is Bradley Valentine. Today, we're talking about the economy and interest rates. Today is Wednesday, January 29th, and the Federal Reserve made some announcements, including the pause on interest rate cuts. If you've been following interest rates, whether you're looking for a mortgage or some sort of high-value loan, you've probably realized the last few months of 2024, the Federal Reserve dropped interest rates 3 separate times for 1 total percentage point. Today, the Federal Reserve held another meeting regarding interest rates, and instead of dropping interest rates, they went ahead and put a pause. Jerome Powell spoke today to reporters. The last few years have been up and down when it comes to the U.S. economy, and the last 2 years have been an economic recovery. The interest rates were skyrocketed because inflation rates were very high over the last 3 or 4 years. Therefore, high interest rates are implemented to drop inflation. When interest rates are high, inflation rates and prices go down because less people borrow. There's less overall economic activity. It just slows the economy and the economic activity, which is the goal of the Federal Reserve when prices are going up. However, prices have been going down and or stabilizing over the last few years, and that is why starting in September of 2024, the Federal Reserve started dropping interest rates. Many suspected that the Federal Reserve would drop interest rates several times over the next 6 to 12 months. There were 3 total interest rate drops for 1 percentage point total. And today, which was the 4th meeting since the first interest rate drop, they made no changes. Regarding this decision, Federal Reserve Chairman stated, "The economy is strong overall, and we've made significant progress to our goals over the last 2 years. In support of our goals, which is a 2% inflation rate, the FOMC has decided to leave our interest rates where they are. The goal of the Federal Reserve is to analyze the economy, the struggles of the economy, and the wins of the economy, and adjust accordingly." While inflation rates were dropping previously, right now they have gone up or stabilized, not enough for the Federal Reserve to make any decision. Right now, a concern for many are the mortgage rates of the U.S. Home prices have been going up over the last few years, as they always do. However, interest rates on mortgages have also been going up, which has been a concern for many potential home buyers. Earlier in 2024, around April or May, interest rates were around 7.5% for a 30-year mortgage. However, they slowly dipped till the middle of September after the announcement to around 6.2%. While the Federal Reserve dropped interest rates 2 more times, unfortunately, mortgage rates continued to increase. And in January, just a couple weeks ago, mortgage rates were over 7% once again. Another interesting factor here is that yesterday, the U.S. Bureau of Labor Statistics released a new report on employment and unemployment. It states that unemployment rates were higher in December in 6 states, lower in 2 states, and stable in 42 states in the District of Columbia. 27 states in the district had jobless rates increases from a year earlier, 6 states had decreases, and 17 states had little change. The national unemployment rate changed little month over month at 4.1%, but was 0.3 percentage point higher than in December 2023. So right now, the labor market is okay. It's somewhat stable, but it's not very strong the way the Federal Reserve would like it. In fact, last year, the labor market was weakening, and that was a major reason for drops in interest rates, as stated by Jerome Powell. Right now, the labor market is okay, as we discussed, and it's interesting because there's a lot of people out there who still talk about struggling with finding a job. Long-term unemployment remains a difficult thing for many of those looking for jobs out there. If you're able to find a job after you leave your current job within a few months, particularly within just 6 months or so, you're going to be fine. However, if you get to the point where you're at 6, 7, 8 months of unemployment, there's a good chance you may spend another 6, 7, 8, or even a year more of unemployment looking for a job. That is where the U.S. labor market is very, very difficult, and it struggles quite a bit. The lowering of interest rates from the Federal Reserve hopes to produce economic activity therefore allowing businesses and consumers to purchase more, to put more purchases on account or on loans, so that way they can increase their economic activity. Increased economic activity overall for everyone is a good thing, as it allows companies to hire more. It allows people to get back onto the labor market and get off of unemployment. But when the Federal Reserve stops dropping interest rates, there's a reason for concern. Right now, it's not a major reason for concern. As Jerome Powell said, the economy still is strong. It's just not at the point where prices are dropping, allowing the Federal Reserve to also drop interest rates to support the labor market. Overall, you might see something like this when it comes to the labor market and prices. The Federal Reserve hopes to bring inflation down. 2% is their goal, while also bringing down unemployment simultaneously. When one gets out of whack, they'll probably try to make a decision like they have the last few months. Or if prices start creeping up, they're going to stop. They're going to put a pause on dropping interest rates to assure that prices do not go up. So what does this mean for you as a consumer? Well, it means a couple things depending on your situation. If you're employed, if you already have a home, if you're not looking to make any new major purchases, it means very little. There may be some changes on interest rates and bonds, stocks, things like those that you may try to invest in, but most people don't really notice much there. What it means for those who are looking for a job, hopefully prices go down so that way the Federal Reserve can drop interest rates, therefore allowing more economic activity, including hiring. So it may mean you might struggle to continue to look for a job. However, if you're looking for some reduction in prices, this could be a good thing, because as prices increase, the Federal Reserve looks to increase interest rates to reduce spending overall. So if you're seeing an increase in prices, which many people have, especially over the last 2 to 4 years, then you want to see higher interest rates. It really depends on your situation. Overall, it shouldn't change the way that you work on your personal finances. You should still act the same way. Maybe you're a little more cautious based on what the economy is. The amazing thing about the U.S. economy is consumers and businesses aren't really driven too much on economic policy. Sometimes economic policy really puts a roadblock in Americans' way, but overall, consumers, businesses, and the free market is what makes the American economy so strong or weak at times. Americans are impacted by the world at the time. Americans are impacted by inflation. Rarely does economic policy, Jerome Powell, even what the president does, rarely do these things really impact your personal life. So don't make decisions based on what Jerome Powell is saying, what Joe Biden previously said, what Donald Trump has said. President Biden made a lot of economic decisions, sometimes unstable, sometimes stable, that somewhat impacted the economy, but it shouldn't change the way you act. President Trump is going to make a lot of new decisions, especially with executive orders over the next few months. He has already made several decisions over the last month, which may impact some things, but it should not change the way you do your personal finances, the way you look at financial freedom. The last thing I want to talk about today is the strength of the stock market. Ever since President Trump was elected back in November, the market has crept upwards while there have been a few times of downward movement, including this week. However, last week the stock market looked quite strong with its movement. The S&P 500 and the Dow Jones in particular looked strong. Cryptocurrency like Bitcoin has hit record highs ever since the election of President Trump. Now, if you read an article from Freedom Finances earlier, we concluded that elections truly make little to no impact on the stock market, especially the few days after a new president is elected. In particular, less than 1 percentage point is a major change. Sometimes it goes up, sometimes it goes down, and it really doesn't matter the political party. whether it's a Democrat, whether it's a Republican. Sometimes Republicans see some very high movement. Sometimes they see some pretty drastic drops. Same thing for Democratic candidates. They don't see much improvement or decline overall when you look at everything as it comes together. However, we have seen some pretty strong movement over the last couple months as the economic outlook of the United States, as it has been in recovery over the last couple years, has been strong. Cryptocurrency like Bitcoin, currently sitting at $104,000, looks to remain a strong investment for those who want to diversify their portfolio, although we don't recommend that you sell all your investments and just put it into Bitcoin. That's rarely ever a smart decision. If anyone ever tells you to sell all of your stocks and put it into one single stock, run, don't listen to them. They're either wrong or extremely mistaken. And even if you get lucky, even if you would have missed out on a few $1,000s, it's never a good idea to reduce the diversification of your portfolio. Right now, the state of investments is strong, and if you have been investing in the stock market with your income, whether it's in a 401k, an IRA, or just a personal investment portfolio, you're probably looking pretty strong. What I recommend is you continue good, diverse portfolio, whether it's ETFs, mutual funds. You can definitely look into individual stocks. However, do not use emotions while you invest, which is almost an impossible task because most people use emotions, whether it's good, whether it's negative, and that's when big mistakes are made. So right now, looking at the stock market, the S&P 500 ended the day around $6,039. The Dow Jones ended around $44,713. Right now, Bitcoin is trading at $104,190. Meanwhile, some other notable stocks, Netflix is at $978. Coca-Cola is sitting at $62.83. Tesla is sitting at $389.10. And gold is currently trading at $2,700. If you're interested in getting to the stock market, I definitely recommend looking at Fredom Finances. We have a great section on stocks and markets. We have a lot of recommendations for how you should use your 401k, how you should invest wisely. Everything from Fredom Finances is all about how to invest wisely, how to responsibly invest. There's no get-rich-quick advice there, which is a good thing. Some people may not see it as a good thing, but it's a good thing because we're not going to lie to you. We're not going to tell you that you can quickly get rich. However, you can smartly invest your money. You can build strong budgets, which is a very important first step of building financial freedom, and we highly recommend it. That's all we have for you today in the Fredom Finances Show. Continue to look for more on YouTube and podcasts as we add more content with guests. You can find our latest video of ranking financial advice at freedomfinances.org or on YouTube. In the next few days, we'll be talking with one of our writers, Nick Arrington, about the stock market and the state of the stock market as well as the state of investments. So keep an eye out for that in the next few days. Once again, my name is Bradley Valentine. I hope you've enjoyed our content today. Have a great day.